Hey, all you everyday traders, welcome to another episode. This is Greg Jensen of Options Animal, joined as always by my friend and partner, Eric Hale. Good to see you, Eric.
Good to be seen, Greg. How are you?
I'm good. The markets keep rolling. We keep pushing to all-time highs. We're off a little bit today, but
Hey,
pretty
serious
close
question
up.
for you. This is the season where everybody's talking about forecasts and everybody's bullish. I don't know if you saw that. I put out a tweet talking about inflation and where everybody's forecasts are. There's some pretty astronomical forecasts for 2025, but there's also a lot of people that are talking about being cautious in the first quarter. We've had such superlative moves. Anybody that sells now is going to pay a lot of taxes. Do you think people who are going to portfolio rebalance would wait until January? You think we're going to get a pullback in January?
I think it makes sense to sell in January versus sell now, right? And it's a whole other year before you have to pay your tax consequence. So sure, I don't see anything in the next 2 weeks before the end of the year outside of some type of black swan event, which
Wait a
maybe,
minute. Let me.
maybe we get.
Okay,
It's
hold
black
on.
swan's unknown, right?
Black swans are on. We don't know black swans, but pause on that. I'm gonna make you think for a second. What's happening next week?
Yeah, I know. Next week we do have a
Two
couple
big
of
things.
central
Three big.
bank.
No, yeah.
There's more than two, but two particular ones that are going to be in focus.
Right.
The Bank of Japan and of course our Federal Reserve, both having central bank meetings, likely get interest rate decisions. The futures market is pointing like those interest rate decisions are going to be going in the opposite directions, where you could see a cut from our central bank, a rate increase from the Japanese central bank, concerns about the resurgence of the yen carry trade situation that happened. What was that? August, first part of
Yeah.
August, end of
Yeah. Beginning
July.
of August. Yeah. And that
Uh,
was because of the Japan. We talked about that on the last episode. And since our last episode, you know this. A friend of ours, Michael Guyed, lead lag report. He's going to be on our next episode. Next Friday, we're going to record an episode with him to talk about it, and this will be the aftermath of whatever happened. And I know that he's cautious about next week. I would express caution. Um, we could see some volatility, and the weird thing is, I don't think you're not seeing it in the VIX. The VIX is very calm. And I haven't drilled down to look at the S&P. This is one of the benefits of having 0 day options now is that we have a couple weeks that we can look out and see where the volatilities are. Uh, I'm gonna wait the weekend and think about it and do some research, but I'm thinking about hedging myself, for the second half of the week. The Fed. But by the way, does the Fed need to cut rates? Let's talk about that.
Personally, I don't think so. But before we get into discussion about central bank, let me talk. I want to finish my thought on next year.
Okay.
You asked a question about tax wise, does it make sense to have a sell off? It actually does at the beginning of the year. And I think that goes back to also from a perspective standpoint. We've had two, and I actually haven't done the research, but this may be the best back to back years that we have had in stock market history. I mean, I don't know when the last time we've had 25+% returns in the S&P in back to back years. Just stellar move in 23 and 24. And so I think some of the concern that you alluded to of concerns in the beginning of the year, I think are more than anything just coming back to the mean, a mean reversion that we've been so overextended and so bullish for a couple years. A 10 to even a 20% correction right now, I actually think is a healthy thing in a longer term bullish market, but that doesn't mean in the short term it can't cause some pain. And maybe that happens before the end of the year, but so yeah, I don't know. I don't know if we see it this year. If it is going to happen this year, I think it's going to come, as you mentioned, from these potential actions by the Fed next week. And if in fact they do cut rates, which leads back to your last question you just asked,
It
do they?
is it is pretty scary. And if you We're seeing from a couple different places. Goldman Sachs is a very bullish short-term forecast. The next 12 months is very bullish, but they're talking about a decade where we're going to average 3% on the S&P 500. So they're thinking the next 10 years is going to be pretty flat. And Bank of America came out, and Barclays, I think, came out with similar analyses too, looking at where the earnings are, that we're at such a high level. But then on the other hand, I was reading Ed Yardeni's pieces this week. Ed's pointing out that we keep setting new records in terms of revenue and earnings growth. So in terms of the S&P 500, it's hard to look back and compare what it was. I think I heard this on Bloomberg this morning that I think 75% of everything, the majority of the S&P 500 is undervalued. If you look at the PE ratios historically, it is the Mag 7. It's just those stocks that are at the top. And if you look at the way that the S&P 500 is built, it's really changed quite a bit. And we've got these superlatives that have happened in the Mag 7, which is, faded for a while. And now the Mag 7 is back again with Tesla and all these other tech companies just soaring into the end of the close. Nvidia is down a little bit today, but we're seeing, certainly the tech boom. And so there is an argument to be made that if you are a stock picker, maybe avoid those, the top 10 holdings or top 7 holdings in the S&P 500. There probably is value there. I'm
So
in the camp that it's going to be bullish, but I am afraid of this pullback in January because I'm just thinking like, well, you mentioned the superlative markets we've had 2 years in a row. Today's the day my wife retires, and it's because we've
hey,
done so well. I mean,
yeah.
because we've done so well in the market. We're way above what we need, and we're very fortunate. Now, we're not going to take that money out. Still need to live on my salary, by the way. So the money's just going to sit there. So things are going to change here in the Hale household a little bit, where we lose my wife's income. But we're going to look forward to a change in lifestyle here because the markets have been so good.
That going back to your comment about Goldman Sachs, and it was, I think in October or so, they put out that piece expecting a 3% return over the next decade. There have only been 3 times over a 10-year period where we've only averaged that. The Great Depression, the 70s stagflation issue, and then the financial crisis of 2008. Those are the only 3 times in history where we've only had a 3% return. So does Goldman think there's another major economic crisis in the next 10 years? I think that's kind of what they're saying, right? Whether that happens in the first part of this 10 years or the latter half, they
No,
don't say.
I don't think it's a crisis that they're looking at. I think it's the fact that they're just saying the market's gotten ahead of itself, and we've uh, equities are overpriced, and just looking at the current
Especially those Mag 7 that you were talking
yeah.
about.
So just from a valuation standpoint, traditionally when we've gotten, if you look at the PE, the PE or the CAPE ratio or something like that over time, when we've gotten to these points where we're at very excessive PE ratios, and we're nowhere near extremes. We're excessive, but we're not near the extremes we've been in the past. Those subsequent years have been poor. So I think there's a dichotomy of views because when I read, from even Goldman Sachs, there's different analysts have different outlooks, and there's certainly no shortage of outlooks this time of year as they're all coming through and trying to process them and pick them. But I think it might be prudent to buy some puts, by the way, next week, probably before Tuesday, and then looking towards the first of the year. My thought, I love the collar trade, which is a trade where you can still make money if the stock goes up, but you get great protection if it goes down. Now, if the stock explodes to the upside, you miss out, but you still make money. So I try not to get FOMO. I placed a trade that I share with the community at Trader Oasis on Broadcom, and it's doing very, very well. And I debated about whether I should do long calls or I did a credit spread where I got 100% return on my money. So that's a pretty good return. Now, I could have had hundreds of percents because the call that I was looking at was something like $7 and now it's 43. So, that would have been like a 700% return if I bought the calls and somebody said, do you feel bad? And listen, I get FOMO like everybody else, but I try, a win is a win. 100% return is, nothing to shake a stick at. And I'm just I'm not gonna try and get FOMO and say, well, if I'd have done that, I could have done much better. So I try to avoid FOMO. That's why we have exit plans, why it's important to have your, due diligence strategy, set your goals. And there's a few trades that I've placed that are would be doing a lot better. I nailed Boeing, I nailed Palantir, um, uh, the couple others that are Amazon is actually doing really well. And I've got trades that are capped on their profits there, but hey, profits are profits. So anyway,
There are still some signs, and I'll take maybe the other side of the argument a little bit about the valuations of the market. I don't think the S&P is overly valued. I think you're right there, other than Mag 7, but there are some signs in other investable areas that we're starting to see rampant speculation. I'm specifically referring to crypto right now.
are you
Uh,
making fun of my MicroStrategy trade?
I'm not making fun of
Let's talk about
MicroStrategy.
MicroStrategy.
I think MicroStrategy is an interesting trade. I think and it's not actually Bitcoin that I'm even talking about, even though that
Oh.
has
Are you
been,
talking about Fartcoin?
I'm talking about fart coin. I'm talking about all of the like
Oh, wait, what was it?
randomness.
The
I'm even
Luigi coin,
the Luigi coin, exactly. Disgusting.
Haktua
Um,
coin.
there's a, yeah, exactly. That one. Even the move in the one that's been around forever, XRP.
Hmm.
It's got another name too, but anyway, huge move this last. It's gone from 60 cents. It went as high as $2.80. 400% return in a week. Um,
It reminds me of JPEGs of smoking monkeys.
yeah, exactly.
Like,
And
what was
it,
that? Something yacht? What was it? Something yacht club? Was it? What was
oh
that?
yeah,
That they had all these monkey. People were paying like hundreds of
yes.
$1,000s for a JPEG, a picture of a stupid looking monkey.
So I don't know if we're there yet, but we are seeing some speculation start to s- spike again.
Is that
Um,
is that a warning for the market? Are we
maybe,
back to
maybe a little bit of
2021
warning.
highs or something?
Yeah, maybe it's time for some profit taking and to humble some investors who are thinking that fart coin is a legitimate investment.
It,
Um,
it is pretty amazing that things like people actually put real money into that stuff. What I hope is, I mean, I have faith and believe in mankind. I think it's a whole bunch of people putting a little bit of money in it. Now, maybe somebody's like, "Hey, I got an extra $100 and I'll do it." You get a few 100,000 people doing that, and then you got millions of dollars. I hope nobody's putting their 401k or their IRA retirement money in fart coin.
yeah, I'm hoping that is the case too, because yeah, that's
Oh yeah, I mean, I'm intrigued by Bitcoin. I told you my story. I bought 3 Bitcoin. I put them with Mount Gox. Mount Gox went bankrupt. I took my eye off the ball. The money's gone. There was a class action lawsuit. I found out after the fact. I reached out. I have no way of getting those coins back, and I'm not gonna. Like when I talk to people, they're like, "Dude, now it's 300,000 bucks." So I can't get them back. I have no way of getting them. If I ever find the code, which I put somewhere, but I can't find it because long story short. So I'm fascinated and I'm totally okay. And I'm happy for people making money on it. And I think other people should be okay too. If you find yourself, you get those emotional trades, like what emotional decision have you ever made that was a good one? And maybe deciding to marry your wife. Okay. You were emotional about that. But in terms of money, emotional decisions on money, I don't know of any good emotional decisions that I've made. And where we tend to, you listen to, was it Francis Templeton or Lord Templeton? Markets die on euphoria. So they grow on pessimism and, we hit this period of optimism and then we get euphoria. We're not at euphoria yet, but Fartcoin and the like are signs of we're getting close to
we're
euphoria.
getting close. Yeah, that's exactly right. We don't see, these outsized moves in um, regular S&P 500 companies. American Airlines is not trading at $50, and Gilead Sciences isn't at 400. All good. Those are both good companies, both long parts of the S&P 500, but they're trading at reasonable valuations, arguably, undervalued. Those two as an example of going back to that point you made earlier that not that most of the S&P is actually trading at a reasonable PE. I think when everything starts to get stretched and you have you have your barber or your Uber driver giving you stock tips. You know that's when you're starting to get to the point where it's maybe a little overextended.
I have a friend who's a professional comedian, and she private messaged me and asked me what I thought about Bitcoin. So, and she, I don't know. Interesting. So I'm glad she's asking. It's an interesting conversation. Horace is the guy to talk to. We should get Horace back here to talk about Bitcoin again. I'm really happy for him. He's an awesome guy. Speaking of other instructors at your at Trader Oasis, you've got your big annual show coming up.
We
Options
do.
Animal, right?
We do, yeah. The Options Animal annual show is coming up here in 2 weeks. 2 weeks from today, actually.
Let me throw a curveball at you. Is that something we'd put on YouTube?
Well, we could. I think that's maybe we record it here and put it out there even on our channel. It'd probably be okay. I do worry a little bit about can we convince Karen to turn a camera on?
Well, we send the makeup crew to her house, and she did it before. Karen was on an
Yeah,
episode.
that's true. She did a recording here with us
Yeah.
here in the
I
show.
think if we
So,
tell them to get ready, I don't think she'd mind doing it once a year. Um, but yeah, we got a good year coming up. That by the way, that's really exciting. There's some bragging rights. I think Jeff is going to win this year because he had SoFi as a stock to watch, and I am dead last DFL as they say. My
I
picks.
thought I was going to win until Oracle's earnings. Oracle had been crushing it for me this year, and then they went from 192 to 172. They've had a really good year, but
One of
it,
my picks was Weight Watchers last year. And this time last year, if you looked at a chart of Weight Watchers, it had been off, all recent really highs. It hit a valley. It's on its way up. And then they make announcements that they're going to move forward with GLP-1 inhibitors. So they're going to start prescribing or getting access to their membership to use these, the Ozempic and the Wegovys, and Oprah was on board. And I think like if you could come up with like a formula for success, GLP-1 inhibitor agonists and Oprah Winfrey, how could you fail? And the stock was at $8 and now it's at $1. And they screwed that one up for sure. So
yeah.
that was my stock to watch. Now, the stocks to watch thing is a little bit like that high school contest, which let's pick a stock, and you go for the gusto and you roll the dice because there's no consequences. So it's pretty much for bragging rights. And as we always point out, that you can make money in a stock. Some of the best trades I've done have been on stocks that have gone bearish. And when I think, and if I didn't done that Weight Watcher trade, I probably should have done my favorite trade, the Costanza trade, do a
Yeah.
bearish trade. And like I'm thinking about doing that right now on AMD. I did it on Boeing, and it's just phenomenal right now how that trade's working out. So, anyways, you can have a stock go. You can like a stock and still make money with it going sideways or down. So that's the point. Is that what I really think is worthwhile listening to is that you're going to get, people who study the markets and spend a lot of time in the markets and talk about their thoughts. By the way, this is the sort of thing that happens every day in our two communities, in Options Animal and Trader Oasis. Is we've got conversations like this that are happening behind our paywall. And for people who are looking for more timely and interactive discussions, you should probably check some of those out.
Well,
Well, you cut me off. Let's go back to um, the Fed next week.
yeah, what's the Fed going to do? I actually wouldn't be surprised to see. I think they need to pause. I don't know if they will. Um, I think the markets have been strong enough. I think the economic data we've had strong enough justifies them waiting right now. And we got a little bit of that message from a few different Fed participants.
Yeah, in New
That
York
kind of
last
said,
week.
yeah, we're okay to wait right now. We actually think we're going to
Oh
slow down,
yeah, some of the chatter. Yeah, yeah.
but will they actually wait this next meeting? I don't know. It's
You know
been
what's
highly
interesting?
forecast that they're cutting.
I think if you the mo I've talked to several former Fed members, and they're all in the camp that a pause is appropriate. But yet it's the people, except for Michelle Bowman, everybody else on the committee. I'm really I'm befuddled to try and understand what they're seeing, because let's look at some data right now. So you folks at home, the Fed's dual mandate is two things. One is to try and keep inflation under control. So here's the consumer price numbers, just looking at the charts. So we've got the headline and the core. The core takes out some of the volatile components of food and energy. This does not look like a chart that's continuing to head down. Uh,
Nope.
and tighter policy would force it to go down. And we're easing, and it's as we're easing, it's not going down as much. And I always share I like to look at this. I like to look at this table. It's a little bit of an eye chart, but here's the items that are sorted by. This is the CPI table. This is table 6. These are listed by importance. So the month over month change was 0.3, rent of shelter 0.3. I always like to do the squint test. So look at the important stuff. Which way is it going?
Yep.
I mean, it's all to the right side. It's all increasing. And you had this conversation with somebody saying, well, good, inflation's coming down. Prices should go down. Absolutely not. What inflation is prices going up. They're just not going up as much. The only way the prices are going to come down is if we get a recession and things go negative. Get used to the high prices, people. They're not going away. And I look at this chart and say, how do you say you've got inflation under control? You know, 0.3% times 12 is 3.6% annualized. That's nowhere near your 2% growth rate. Nobody thinks we're going to get to 2%. If you look at the forecast for next year, I saw a summary table. I put it on Twitter yesterday. Nobody, and I'm talking about all the institutions that you've heard of, Bank of America, Goldman Sachs, Barclays, the list goes on. Nobody thinks we're going to get to 2% next year. Okay, there's one company, Ing, which, okay, everybody else is, we're going to be higher, maybe even 3.6, which is my forecast. So we look at CPI here. Look at PPI. It's worse. Here's PPI. Does this look like inflation's going down? Okay, so inflation doesn't appear to be going down, and we're stimulating the economy by cutting rates. That's what stimulating does. The other factor, of course, is unemployment. So here we have the non-farm payrolls, jobs, and we have the unemployment rate. And unemployment rate, yes, it went up a little bit. I mean, went from 4.1 to 4.2 last time. So people are saying unemployment's increasing. This is what the Fed is. All of a sudden, this is what we're hanging our hat on, is that jobs are worse. But on the other hand, if you look at the non-farm payrolls, it continues to be very strong. And I agree that there's some changing dynamics in the labor market, but this is not a weak labor market. We have a very strong labor market. And with what's going to happen next year, nobody knows what's going to happen with immigration. If we take 20,000 people out of the United States, that is not going to help inflation. I mean, that is not going to, well, it's not going to help inflation. It's also not going to help unemployment, in my opinion. We'll see how it goes. But I just don't see. I mean, I want to channel Kramer here and say they know nothing. What are they looking at, Greg? What do you think they're looking at?
I am baffled myself. I mean, honestly, I know they don't, in conversations with them like you've had, I've been there with them and had conversations. They have said, we don't have any other data that you guys
Yeah,
don't
right.
see.
They don't have anything.
We may get
Exactly.
it a little bit earlier than you get it. But we don't have any other data points. We make our decisions. So I agree. I don't know what they see that causes them, other than the fear. There has been some talk out there about the fear of liquidity going away, and maybe they are afraid of they're not and they're wanting to slow down the rate at which liquidity is disappearing, and so they're maybe trying to get more accommodative. That's the only
But
thing I can see.
that goes to the price of bonds, treasuries, the
Yeah.
stock market, and that is not the mandate of the Fed. The
No,
Fed is
exactly.
the
That you're
Fed is
exactly right.
yeah, is moderate inflation and reasonably low unemployment. And I'm a little bit fearful of where we're heading here. And I hate to say it because, like I said, I have some friends who are actually voting members of the Fed. I Are they trying to cover their own asses here and thinking about the new administration who wants to see lower rates? I mean, I'm a low rate guy. He wants to see rates coming down. So are they all thinking, am I gonna, I want to appease the new administration? I don't want to believe that's true. They say that's not true, but it's kind of interesting that maybe it's in the back of their head. Maybe it's not in their forehead, but is it having some influence? We'll see next week. I mean, 94% chance of a rate cut. I just don't know.
Yeah, well, I don't know either. I'm actually hoping they don't. Um, and I know we'll get some more information and a deeper discussion when we have Mr. Gayed on next week to
Yeah.
discuss the potential ramifications of what that could be if we do get that rate increase from the Japanese central bank simultaneous with our central bank cutting, and what that could do to and whether or not that could bring back the carry trade issue that caused all those margin calls, that then causes panic sell. Panic may be the wrong word, but forced selling anyway, to cover margin calls that caused the sell off in August. So
Well, I was with Michael
we'll
last
see.
week in New York City, and he's not going to make us feel any better about this. I'll tell you what, he's not going to make us feel any better. And if we tell him that he can use the, you know, if we could tell him make this R-rated, adult rated, we're effed, is what
Happy to do so.
he'll drop the F bomb. No, his F actually he uses the F few. That's his F word, but he has the other F word. Which, by the way, I was overheard somebody talking to him about like, why do you swear so much? And he said, you wouldn't believe the hits. If I drop the F bomb, it's like doubles the engagement. It just gets people fired up. And he's got 750,000 followers on Twitter. So it's working for him. I'm not going to criticize the guy. I'm just thankful he's coming in to talk to us. So if you have questions for Michael Gayed, let me know. We're going to talk a little bit I gave him a little bit of an agenda. We'll talk a little bit about his background and his dad, who's a very famous technical analyst. And then hopefully get some insight and some information that helps you folks. Our goal here with Everyday Trader is to take some of these economic policies and this language that may be hard to understand, maybe it seems arcane or foreign, and to try and make it simpler and to take it down to what does it matter to you as a trader. And I think we've given some nuggets today that hopefully you can use in your own portfolios, because that's our goal.
Okay, well, thanks, my friend. We're gonna get together in a couple hours, right?
Yeah. Well, are we? Are you doing the weekly with me?
I'm on the weekly with you, yeah. So
Well, I got to do the slides. I got a busy day, and
all
I've got
right.
another meeting here in 7 minutes. So, and we're gonna try and get this episode. I don't think I'll get the episode out for the close, but I'll share a trade idea that I did with some of my clients on Trader Oasis today. I did something similar to this on Broadcom, and it's crushing it. But the trade that I did is I'm not going to show it here. Like, should I show it? I'll show it. The trade that I did is what I call an exploding bull put. And this is a trade that Options Animal teaches in level 8. And so the nice thing about this trade is it's a high probability trade. And in fact, it's actually already working pretty well for me right now. When I placed the trade, this is the stock price on this axis here. And this is your profit and loss over here. So I'm risking 1878 to make 2122. And this is, very bullish trade on MicroStrategy. So there's a bull put trade. So I've got a short put at 395 and a long put at 385 and a long call at 300 and a long call at 410. And this gives you the best of both worlds. With the bull put, the put credit spread, you have high probability of the trade working, but small profit, big risk. With a bull call, you have low probability of the trade working, but you have low risk and high profit. If you put the two together, it's like Reese's peanut butter cups, which is my favorite candy. You get peanut butter, chocolate, a little bit of salty, a little bit of sweet. Oh man, it's my favorite. This is the Reese's peanut butter cups. This is the options unicorn, because you get a trade that is I've got a high probability of the trade working, about a 53% chance of the trade working, and more than 100% return on risk. So it's a little bit of a unicorn. It's a simple trade, but there's some moving parts you need to understand. And so I shared this with our community today, similar to a broadcom strategy, which yesterday is doing very well. So anyways, that's what we do here at Options Animal and Trader Oasis is we try to help our clients make more money. So with that, let's wrap things up and say goodbye.
Yeah. See you at the next one.
Thank you, sir.